Bismillahirrahmanirrahim. Assalamu alaikum. In today's video, we are going to learn the journal entries of a consultant services. As a service render business, how they are passing their journal entries against their sales, receivables or credit sales. So all the journal entries in this video we will learn inshallah. So let's start what we are going to do today. We will see the journal entries in consultant books, payment schedule, journal entries in client books, contract payment terms. So let's start. I have here a contract picture. I have taken a screenshot of this area, the payment terms, the consultant fees from a contract. So this is a designing consultant who is designing the buildings, like they are in the CAD, they are working as a CAD and designing the building maps. So here the terms are: first payment 20% upon signing the contract, second payment 30% upon preliminary approval, and the third payment 40% upon completion of design stage, and the final payment is 10% upon issuance of complete documents. So here we have summarized this in a schedule like contract conditions: down payment 20%, first payment, second payment and third payment, which is final payment. And this is the contract amount. Invoice value will be like 20%, 30%, 40% and 10% will be 1000 total invoice value, the total contract value. Here we have to include VAT, value added tax is 150. Here included VAT 1150 and excluded VAT 1000. Let's move further and see the journal entries. Consultant is ABC consultant and client is XYZ company. The XYZ company is taking the services of ABC consultant. Now here 20% down payment upon signing the contract. So that value will be 200. So when we will calculate the VAT, so it will be 230. When receiving money from XYZ company, we are going to pass an entry like cash and bank debit. We receive the money from the client, and XYZ company, as it is he is our debtor, so he will be credit as 230. This amount is included VAT. We did not done yet the sales. We did not give him any services, so we did not recognize yet any sales. So upon completion of first stage, when we move to the second stage, the down payment will be non-refundable. So we need to recognize now as a sales. So what entry we will pass? XYZ company debtors asset account will be debit. This account which was made by credit, it is now debit. VAT output as a liability, which will be payable to the government by consultant. We are receiving from the client and we need to pay to the government. So that will be credited by 30. And here sales or revenue as a profit and loss account will be credited by 200. Let's move further. Here when issued second invoice upon completion of 30% work as a preliminary approval, so the payment value, the 30% will be 300 and value added tax will be 4500. We have completed this work as we need to record a sales. So invoice recording in the system when issued the invoice to the client. So XYZ company debtor account will be debit. We need from him 345. So VAT output as liability will be credited by 45 and sales will be credited by 300. Now when this invoice payment paid by the client to us, then when we receive the money of this invoice, we will make cash or bank debit, and XYZ company as a debtor account will be credited with 345 included VAT. The next step, the third invoice, which is 40% upon design completion stage. So the entries will be same, only the payment will be changed, like 40% payment and 15% VAT will be 460. XYZ company debit, VAT credit, sales credit. So when received money against this invoice, so cash and bank debit, XYZ company as a debtor credit 460. So here we have a final invoice upon completion of the project. When we submit the invoice, the amounts will be changed, the entries will be same, and when we receive the invoice, there will also be only the value will be changed, cash and bank debit, XYZ company as a credit. So this is the whole procedure of the sales and recording of the entries as a consultant perspective. Let's move further and see what entries are passing by the clients in the books of the client. So when received an invoice of down payment, when he is paying the down payment while signing the contract, so he is paying to the ABC consultant as a creditor because the consultant is the supplier. So he is as a creditor, as a liability, current liability will be debit with 230, and cash and bank asset will be credit 230. So this is the down payment which we need to debit to the consultant. He did not do anything yet. So when we will see that he completed the first stage of the contract, we need to recognize this money as our expense. Like as a client, we are a client now, so we need to recognize as a expense. Like design expense, profit and loss account will be debit by 200. VAT input, it is our asset, as we are the the client and we are paying to the consultant, so consultant will pay to the government. So this we are paying, so it will be debit, that is 30. This amount will be receivable by us from the government. So ABC consultant creditor, C liability will be credit 230. Here we make them as a debit and here we made them as a credit, and here expense recognized. The next, when the second invoice received by the client, so 30%, so the 30% amount will be 300 plus 15% VAT, 345. When the client is recording this invoice in his system, so design expense account will be debit with 300, value added tax input account will debit by 40, and ABC consultant creditor current liability will increase by 345. So this is the payable amount to the consultant, so this is our liability, and when we are going to pay to the consultant, then we need to pass this entry, ABC consultant creditor account will be debit and cash or bank asset account will be credit with 345. We are paying VAT with our expense. So as long as the contract will move on, the same entries client will pass in his books. So I hope guys you understand the concept which I want to convey with you. So please subscribe our channel as it keeps motivated us to make more videos for you. Thank you very much and goodbye.